Hello students, welcome to another video session for your financial accounting paper. In this video, we will continue with the same method of accounting for joint venture, that is, when separate set of books are maintained by the venturers. In this problem, we have two venturers, that is Ujjwal and Sajal, who started a venture to construct 5 flats in a building, sharing profits and losses in the ratio of 3:2. Okay, so the profit sharing ratio of Ujjwal and Sajal is 3:2. The contract price of each flat was rupees 90,000. That means each flat after construction will be sold for rupees 90,000. Ujjwal contributed rupees 2 lakh and Sajal rupees 1,40,000. So the capital contribution of the venturers is Ujjwal 2 lakh and Sajal 1,40,000. And a bank account was opened in their names. So there is a joint bank account which has been opened in their names. Cost of raw materials, wages, and other expenses amounting to rupees 2,90,000, 35,000, and rupees 5,000 respectively, and the architect's fee, which was 2% of the contract price, were met from the joint bank account. So the expenses out of the joint bank account include the cost of raw materials, wages, other expenses, and architect fee. Other expenses also include raw materials supplied by Ujjwal costing rupees 15,000. Okay, and Sajal supplied machine costing rupees 5,000. Other expenses paid by Ujjwal also include transport charges rupees 3,000. So we have expenses out of the joint bank, expenses paid by Ujjwal, and also machine supplied by Sajal. Sajal is entitled to commission of 1% on the cost of raw materials used. Okay, so Sajal is also entitled, that means he has to get commission of 1% on the cost of raw materials used, which we have to calculate. Four of the Four of the flats disposed of at the contract price, but the fifth one was not according to specification. So out of the 5 flats, 4 flats were disposed of at the contract price or sold off at the contract price, but one flat was not according to specification, therefore it could not be disposed of. This flat was taken over by Ujjwal at the cost of construction plus 5% profit. So Ujjwal took over the unsold flat at the cost of construction plus 5% profit. Unused raw materials and machine taken by Sajal at rupees 5,000 and rupees 1,000 respectively. So Sajal took over raw materials that were unused at rupees 5,000 and machined at rupees 1,000. So we have to prepare joint venture account, joint bank account, Ujjwal and Sajal account to close the venture. So for this solution, we have to start off with the working notes. First, we will find out the contract price of 5 flats. Given in the question, the contract price of each flat was rupees 9,000. Okay, so each flat cost, the contract price of each flat was rupees 9,000. So the contract price of 5 flats will be rupees 9,000 into 5, which will be rupees 4,40,000. From this amount, we can find out the architect's fee, which is 2% of the contract price. So architect fee is equal to 2% of the contract price, which is 4,50,000. Okay, 2% of 4,50,000 will give us rupees 9,000. So the architect fee is rupees 9,000. Next, we have to find out the cost of materials consumed. So for the cost of materials consumed, we have to first enter the materials purchased. So materials purchased out of the joint bank amounted to rupees 2,90,000. There is also materials supplied by Sujal, okay, amounting to rupees 15,000. So we add these materials purchased 2,90,000 at materials supplied by Ujjal, rupees 15,000. After adding, the total materials used in the joint venture is 3,05,000. However, there were some unused materials taken over by Sajal. So these materials were not used for constructing of the flat. We only want to know the cost of materials that have been consumed for constructing. So we deduct unused materials taken over by Sajal, which is 5,000. So after deduction, 3,05,000 minus 5,000 will give us the cost of materials consumed, rupees 3 lakhs. Okay. Next working note will be the valuation of unsold stock. So we have to find out the value of the value of the flat which was taken over by Ujjal at the end of the joint venture, which was not disposed of but taken over by Ujjal. So in order to value the flat, okay, we add all the expenses used for constructing the flats. We first add all the expenses used for constructing the flat. Okay, so first we have to enter materials consumed from the one we have calculated, which comes to rupees 3 lakhs. To this, we add wages of 35,000, other expenses of rupees 5,000, architect's fee of rupees 9,000, depreciation rupees 4,000. In the question, it is given that in the question here, okay, Sajal supplied a machine costing 5,000. So in the beginning of the joint venture, the machine cost rupees 5,000. But at the end of the venture, here the unused material and machine taken by Sajal, at the end of the joint venture, the machine cost rupees 1,000. That means the machine have been depreciated over the time period of the joint venture. So depreciation of the machine. So depreciation will be rupees 5,000, the cost of machine at the beginning, minus rupees 1,000, cost of machine at the end, which gives us 4,000 depreciation. Transport charges 3,000. The others are expenses given in the question only. So we add all the expenses plus materials consumed. We will get the cost of construction of 5 flats, okay, which will be 3,56,000. So after adding, we will get the cost of construction of 5 flats at rupees 3,56,000. Okay, so therefore, the cost of constructing one flat will be 3,56,000 divided by 5, which will give us the value of constructing one flat at rupees 71,200. The unsold flat taken over, the flat taken over by Ujjal Ujjal took over the flat at the cost of construction plus 5% profit. So we add 5% profit of we add 5% profit of 5% of 71,200, which comes to 3,560. So after adding the cost of the flat plus profit, you will get the value of the flat taken over by Ujjwal. This is the value of the flat taken over by Ujjwal. So value of the flat taken over by Ujjwal is 74,760. So now we can move on to prepare the joint venture account. So the joint venture account is a nominal account where we debit our expenses, purchases, and losses, and we credit incomes and gains. So we'll start with the expenses made out of the joint bank account. So expenses made out of the joint bank account include raw materials of rupees 15,000. Okay. So expenses made out of the joint bank account include materials at rupees 2,90,000, wages 35,000, other expenses 5,000. Just align these numbers. And also architect's fee as calculated in the working note 9,000. So we add all these expenses. Okay, so the total expenses or payment made out of the joint bank account, okay, after adding, you will get 3,39,000. Next, we have to make entry for the expenses paid out of or paid by the venturers. So for expenses paid by the venturers, we have to debit Go Venturers account. So to Go Venturers account, Ujjwal supplied raw, just write in short, materials amounting to rupees 15,000. So Ujjwal supplied raw materials amounting to rupees 15,000. Sajal supplied machine amounting to rupees 5,000. Okay, this comes to a total of 15 plus 5,000 will give us a total of 20,000. Next, okay, apart from the raw materials and the machines supplied by them, we also have transportation charges paid by Ujjal and the commission in which Sajal is. Okay, so we have transportation charges paid by Ujjal and commissioned in which Sajal is entitled. Commissioned of 1% on the cost of raw materials used. Here, the cost of material use is rupees 3 lakh. So commission at 1% will be equal to 1% of rupees 3 lakh, which will be equal to rupees 3,000. So the commission entitled by Sajal is rupees 3,000. Now we make the entry. To Go Ventures account, Ujjal for transport 3,000 and Sajal for commission 3,000. Adding both the amounts, which will give us a total of 6,000. So these are the expenditure for constructing the 5 flats. So now we'll move on to the credit side. Okay, so out of the 5 flats which were constructed, 4 were disposed of at the contract price. So we have to credit joint bank account for the money received on the flats which were disposed of. So by joint bank account, the contract price was 90,000. Okay, into 4. So the contract price of 4 flats will be 90,000 into 4, which will come to 3,60,000. The remaining flat was taken over by Ujjal. So we debit Go Ventures account for the flat taken over by Ujjal. The value of unsold flat taken over by Ujjal is 74,750 as calculated in the working note. We also have to make entry for the materials and machine taken over by Sajal. By Ventures account, Sajal unused materials $5,000. and machine. Unused materials 5,000. Machine was taken over at rupees 1,000. This will come to a total of 6,000. So from this, we can find out the profit or loss. Just looking at the amount, we can make out that the credit side is more since the first item itself is 3,60,000, okay, which will be more than the amount of the debit side when added. So after adding, you will get 4,40,760 on the credit side, which is more than the total of the debit side. So we'll write the total of the credit side. From the total, we will deduct the total of the debit side, which will give us a profit of 75,760. Okay. So from 4,40,760, we will minus 3,39,000, 20,000 and 6,000, okay, which will give us a total of a difference of 75,760. This is the profit of the joint venture, which will be transferred to co-venturers account in their profit sharing ratio. The two co-venturers account, Ujjal's share is 3/5, okay, of 75,760, which will come to 45,456. Sajal's share is 2/5 of 75,760, which will come to 30,304. So the joint venture, there is a profit of 75,760 shared by Ujjal and Sajal in the profit sharing ratio of 3:2. So Ujjal's share is 45,456 and Sajal's share is 30,304. Now we move on to the joint bank and co-venturers account. Okay, so let's move on to joint bank co-venturers account. So joint bank account is like a cash book where we debit what comes in and credit what goes out. So we will first debit the contribution made by the co-venturers towards the joint venture. So the venturers, they made a contribution of 2 lakh and 1,40,000 each. So we will first make entry on that. Okay, so to co-venturers account, Ujjal rupees 2 lakh, Sajal rupees 1,40,000. Adding these two, will come to a total of 3,40,000. So next, we have to debit the expenses paid out of the joint bank account. So from your joint venture account, we can see an entry made to joint bank account. Okay, for the expenses. Okay, to joint bank account for the expenses paid out of the joint bank account, which comes to 3,39,000. So we make an opposite entry of that by joint venture account 3,39,000. Next, again go to joint venture account. There is another entry made by joint bank account 3,60,000. This is for the money received on the 4 flats after completion and disposing them of. So we debit that amount to joint venture account 3,60,000. So we leave this account like this. We will now open the co-venturers account. So co-venturers account, we will first credit with the contribution made by the co-venturers. So by joint bank account, Ujjwal made a contribution of 2 lakh. Sajal made a contribution of 1,40,000. Next, we will go to the joint venture account and see if there are any entries made towards the co-ventures account. Okay, for debit entries, we have to co-ventures account for the materials and machine contributed by the co-ventures, and we also have another entry for transport and commission. So we make entry as such. By joint venture account. For materials and machine. Another entry. For transport and commission, 3,000. Okay, so we still have to make entry for the transfer of profit in the profit sharing ratio, and also entry for the flat taken over by Ujjwal, and also materials and machine taken over by Sajal. So for the debit entry, we'll make a credit entry in the joint bank account. For the credit entry in the joint venture account, we will make a debit entry in the joint bank account. Oh, sorry, in the co-ventures account. This is for the profit made on the joint venture by joint venture account. $5,456. And 30,304. So we will debit the entries for the unsold stock taken over by Ujjwal to joint venture account 74,760. For the machine taken over by Sajal and raw materials, rupees 6,000. Okay, so now we can total the debit side, the credit side of the co-venturers account. After adding all the amount, we will get a total of 2,63,956 for Sujal, let's just carry this there. Some reason. For Sajal, the total is 1,78,304. $456. $304. So from this, we find out the balancing figure of Ujjwal and Sajal account, which will be transferred to joint bank account. Okay, so from the total, we deduct from the total of Ujjwal, that is 2,63,456, we deduct 74,760. We will get a balance of 1,88,696. Okay, and for Sajal, from the total of 1,78,304, we deduct 6,000, which we will get a balance of 1,72,304. So this is how we close the co-venturers account by transferring the balance to joint bank account. So now we can close off the joint bank account. So by co-venturers account, okay, this is entry for closing of the co-venturers account, which was transferred to joint bank account. Ujjwal 1,88,696. Sajal 1,72,304. So adding these two amounts, it will give us a total of 3,61,000. Okay, so now we simply total the credit and debit side, and we have, and the debit side and credit side should balance. If it balance, it means that your solution is correct. So both the totals comes to 7 lakhs. So we've come to the end of the problem. This is how you solve problem number 2 for your joint venture, for preparing joint venture account under the first method, when separate set of books are kept by the venturers. That's all for today. Thank you.